Heya Cryptozens, it's 10 p.m. Pacific time. The date is October 16th, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host as we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Massachusetts Senator Elizabeth Warren was in crypto-related news again this week, along with 6 other U.S. lawmakers. They're asking the Electric Reliability Council of Texas, or ERCOT, for information about its energy usage of crypto miners as well as the potential impact on the environment. So they sent a letter. 3 senators and 4 representatives. In addition to Elizabeth Warren, you had Sheldon Whitehouse and Edward Markey, those are the senators, and then Representatives Al Green, Katie Porter, Jared Huffman, and Rashida Tlaib. Pablo Vegas is the CEO of ERCOT, and they are pressing him for details on what impact the Texas mining industry has had on the stability of their energy grid, climate change, and any subsidies that may have been given to companies. What they're doing, they're claiming that the Texas regulations are too loose, and that's why crypto miners flocked to Texas. Quote, by some estimates, Texas is now home to about a quarter of all U.S. Bitcoin mining and 9% of the cryptocurrency computing power worldwide, a share that is expected to reach 20% by the end of next year. Now that sounds like a win for Texas to me. In their letter, they make a statement. They said, quote, ERCOT is intimately connected with this growth in crypto mining, which sounds almost like they're accusing them of something. In their letter, they said, quote, Texas has become one of the go-to locations for crypto entrepreneurs, with active lobbying of the government by Texas Blockchain Council and crypto CEOs and state politicians alike vowing to make the state the Bitcoin capital of the world, the citadel for Bitcoin, and the center of the universe for Bitcoin and crypto. Now, in their letter, they cited reports that suggested crypto miners use, quote, substantial amounts of energy. And their claim is that it resulted in substantial amounts of carbon emissions. They also claim that ERCOT is potentially prioritizing crypto miners over their retail customers. And so they've got 4 questions. Some of them have multiple parts. First one asks, it's about how much energy is used by crypto miners in Texas and what is the result in terms of carbon emissions. The second question asks ERCOT how they're going to manage operations next year. They also have a question about power purchasing as well as paying people not to use electricity. And that last one asks, what is the impact of crypto mining on the price of energy for the average consumer? And they want their answers by Halloween. So they also don't like the subsidies. Targeted payments to crypto miners not to draw power during peak demand. Their claim is that companies like Riot Blockchain made significant money from those subsidies, and they don't like that. They said, quote, these payments contribute to a larger issue of having consumers rather than industries with outsized electricity demand like crypto miners bear the costs of maintaining the electricity grid. And of course, what do? They bring up that same old insipid, tired comparison. Crypto mining in Texas uses as much energy as a city of 1.9 million people. I think that's cheap. They're trying to make it sound horrible when it's not. This is a good thing. The problem is, it's a crappy, vapid comparison. They know that it is an unfair, uneven comparison, which is exactly why they do it. Because they're too intellectually dishonest to run a fair, even comparison. I say that because the fiat system is so much more wasteful. You've got armored cars spewing emissions. You got banks and ATM machines that need electricity. You got computer networks and printing presses and tons of other parts of this wasteful system that we have going on right now. How much energy do we waste producing pennies, printing dollars? Then we have to store and move all that fiat currency, as well as keep an electronic representation of the exact same thing. Fiat currency is horribly, horribly wasteful. Continuing to support that system is even more damaging to the environment than adopting crypto would ever be. And adopting crypto is the key. We moved one step closer. Thank you, France. Here's what's up. Société Générale is it's their largest bank in terms of market cap in the Eurozone. It's an old bank. It's got a lot of history and credibility behind it. It was founded in 1864 and has 1.4 billion euro in assets. And they have been quietly moving forward on crypto. And so they came out with an announcement of their new services that they have on offer through their subsidiary Forge. That's because they got approval from Autorité des Marchés Financiers, or AMF. AMF is the French financial market watchdog, and they approved Société Générale to custody, sell, and trade crypto. Now, apparently, French VCs are having trouble finding regulated crypto custodians. So that meant things like Ledger Cathay Capital Fund, they were set up differently. The AMF's decision has changed all of that. Now they can custody their digital assets with one of the most well-known banks on the planet. Like I said, they've been making moves. They announced custodial services last month. They said that they were expanding services for digital asset fund managers. And you can transfer that risk over to the bank and have Société Générale act as the fund custodian, valuator, and liability manager. So they came out with these tools that would let institutional investors add cryptocurrency to their company's portfolios. This lets companies develop funds based on cryptocurrencies. France has been getting a good bit of crypto press lately, especially in terms of adoption. Last week, Crypto.com announced a $145 million investment in France, as well as establishing a regional presence in Paris. Luno and Binance, they also got their licenses from France recently, with Binance announcing their own $97 million investment in the country. Now, from France, let's move over to India. Nirmala Sitharaman is India's finance minister, and she revealed India's plan to develop standard operating procedures during their stint as G20 president. In the past, Sitharaman has been calling for a global collaboration on crypto. They've also been cautious in terms of adoption in the past, and they said that they were concerned about financial stability. That said, she was speaking to the Indian press on Saturday when she confirmed that crypto is going to be part of their G20 presidency agenda. And they will just have 1 year to do it. Their stint runs from December 1st of this year to November 30th of next year. The G20, or Group of 20, is a global forum where its members can bring major issues facing the global economy. So it's easy to see why Sitharaman is looking to use that as their vehicle, because she doesn't think any one country can handle or regulate crypto. She also talked about the role that crypto assets play where money laundering is concerned. She said that other members of the G20 have expressed the same concerns. It's also important that all countries should be a participant when it comes to regulating cryptocurrency. Which, all this is kind of funny, right? Because India has not been kind to crypto. If they're not banning it, they're taxing it exorbitantly. And you can't even get credit for your losses either, which is a thing that governments do when they don't want you investing. Now, India is interested in a central bank digital currency. The Reserve Bank of India recently put out a list of features that they're interested in for their own CDBC. But that's a CDBC, not crypto. They're not the same thing. And that's why the Reserve Bank of India, they're trying to replicate all of the benefits of crypto, but without giving up any of the control. Securities Exchange Commission is back in the news again, as is their case against Ripple. We talked recently about people joining the case as a friend of the court. Well, a company called TapJets has just gotten themselves involved. And if you're trying to figure out what coin TapJets puts out, don't. They're a private airline company, and they filed an amicus brief to explain to the court why XRP isn't a security. They used this brief to support Ripple's case. So, TapJets sees the utility and value of XRP is in its use as a currency. In their brief, they said that the way the company was set up, only accepting fiat currency was a hindrance. They said that when they introduced the use of XRP, that helped speed up payments where a fiat currency wouldn't work, like late on a Saturday night. Now, it was useful enough that XRP was making up 48% of their payments. That all changed, however, when the SEC launched their investigation into Ripple Labs. exchanges stopped trading XRP. So that won't work anymore because they can't convert it to fiat. Now, this is similar to another filing. A company in the Philippines called iRemit also filed an amicus brief. And much like TapJets, iRemit made it a big part of their business. They said it helped streamline payments and simplify transactions. This comes as last week a judge allowed Ripple's partners to present their own views on the subject. Given that both sides have asked for a summary judgment, that could have a huge impact on the final outcome. Staying with the SEC, let's talk about Chair Gensler. Because SEC Chairman Gary Gensler has said that the Commodity Futures Trading Commission should be given more authority, but not over all cryptocurrency, just stablecoins. And Chair Gensler is right, sort of, because the CFTC currently only has authority over derivative markets for commodity tokens. This information comes to us from a report by Reuters. Gensler was speaking at an event put on by Georgetown University when he said that with about $150 billion in market cap, stablecoins have a number of similarities to money market funds, and he said that they should be treated as such. He points out that while the CFTC does have anti-fraud and anti-manipulation regulatory authority over the companies that issue stablecoins, they don't have any authority to actually make rules for exchanges. He said, quote, "I think the CFTC could have greater authorities. They currently do not have direct regulatory authorities over the underlying non-security tokens." The non-security part is important here because Gensler has said many times that he sees the vast majority of tokens as securities, stablecoins included. That is, if they're of the algorithmic variety, regular backed stablecoins now. This comes after the Financial Stability Oversight Council, which it's kind of a star chamber of the top financial regulators. They're pressing Congress. The FSOC is recommending that Congress pass legislation to address the risks that they think crypto presents to the greater U.S. economic structure as a whole. So they want to increase the amount of oversight on crypto spot exchanges and stablecoins. That said, I just don't see it happening this year. If the Republicans take the House and Senate, I still don't think that'll make a difference, given the level of rancor between conservatives and liberals in D.C. these days. My hope for bipartisan cooperation on even the most basic and worthy of legislation is virtually non-existent. So we do have an update to you from the Bitfinex-Tether case. When we last spoke, a couple of law firms, Kirby McKierney and Radis Law, they both petitioned the court to have Roche Friedman removed from the case, even though they're on the same side, even though they're all representing plaintiffs in the same case. They wanted Roche Friedman gone because they said that the scandal around Kyle Roche would detract from the needs of the plaintiffs. And while I don't know how Tether feels about all this, Bitfinex said that they're pleased with the judge on the case, that they did remove Roche Friedman from the case. Now, this case, remember, alleges that Tether and Bitfinex manipulated the price of crypto by issuing Tether when it was unbacked. That's their claim. Responding to the news, a Bitfinex spokesperson said, quote, "We are pleased with the court's thorough and well-reasoned decision to remove Roche Friedman LLP as interim class counsel. Roche Friedman's repeated attempts to trivialize and separate itself from Kyle Roche's despicable statements describing unethical conduct were not the least bit persuasive." And so it came to pass that a judge called Kyle Roche's comments uniquely stupid. He said that Roche Friedman has too much baggage to be of any use to the plaintiffs. Turning our attention to Russia, because more companies are cutting Russian nationals off from services due to the EU's recent round of sanctions. Blockchain.com is the latest. They have notified that their users that the accounts of Russian nationals will be shut down in 2 weeks. So, according to a report by the BBC, users will have until October 27th to withdraw their funds. Those accounts will be blocked off after that point, which technically they're not supposed to be providing services to Russians at all, given the results of the 8th round of sanctions that the EU has imposed against Russia. So blockchain offers a custodial service. They also run a non-custodial wallet, which the EU really can't say anything about, given the company has no access to the wallet's contents. They also run custodial trading accounts, letting users buy and sell crypto on their platform. Now, Blockchain.com follows Dapper Labs in suspending Russian accounts. exchanges like Crypto.com, and peer-to-peer trading platform Local Bitcoins as well. A spokesperson for Crypto.com said, quote, "We are fully compliant with EU sanctions." Local Bitcoins stopped trading and wallet services to Russian users on October 7th. That was 8% of the firm's total volume. Binance, they said that they're working on it. They said, quote, "Changes like these take time to implement as we have to carefully coordinate with multiple tech and risk management partners." Now, we were just talking about Bitfinex. They started off opposed to crypto sanctions against regular Russians. They said, quote, "Our view is that the actions of a government do not necessarily represent the wishes of the individuals." He said Bitfinex was willing to protect their users' accounts, quote, "unless otherwise directed by the regulatory authorities by which they are governed." And I think that's going to do it for us tonight. I want to thank you for listening, because when you stop listening, I will stop talking. We'll see you tomorrow night.